Mm, cool. There we go. Good morning,
Good
everybody.
morning, everybody. How's it going?
If you're short, you're having a great day.
Yes, we are.
Very good.
Uh, it's like we said it.
Yeah, weather warmed up. Like yesterday, starting like yesterday, like for the noon iteration or like the midday iteration of the GFS ensemble. Like pretty much like the second cold spike just disappeared, and a lot more above average temperatures, which means lower than average demand, and that's been confirmed through, or it's been in place for 4 iterations. I think it's pretty well confirmed. And then the 34 day, the GFS 34 day, like just plummeted in degree days. So yeah, then now we're seeing price action that's taking that into account. Let's see, yeah, here we go. There we go. All right, so yeah, after midnight, the sell off started taking place, or I guess like taking hold. It's been trying to sell off a little bit the whole way, but also buying back. So didn't really do anything. And then see this big candle right here to try to break below $4. This is the bull. I want to look at this just real quick, and I want to show you. Okay, look, this is a bull bias. Yes, it was trying to break through $4. I get that. Like it's critical support, but it was kind of broken yesterday. So look at this. 818 contracts to make this red candle, and then it's 321 to make one the same size that's green. Just I talk about it all the time, but I know this was the first thing that I noticed this morning when I was looking at charts on my phone. Anyway, we're kind of like we're trickling down. That's it. Weather got like way warmer, and my mind, like we were talking about yesterday, the weather spike like this weekend, the cold spike is locked in. Like that's not going anywhere as far as the forecasts are concerned. But the one for the following weekend, it's out there far enough in the future that there's still a lot of or there was a lot of uncertainty surrounding it. There still could be, it still could reappear, but the closer we get to it, the less likely that is going to happen.
Oh yeah, absolutely. And the closer that we've gotten to it, it has just shrunk. In heating degree days, the hump that existed has just gradually been pressed down until now it's along the line for the 30-year average for heating degree days at that point. And I mean, it's warming up. It's like you said, weather's gonna warm up. I know that may be shocking to some, but going into March, weather's gonna warm up. People who were, going long at like 450, I'm sure that was a shock. That this must be a shock for them, I guess. Uh, Anyone can go back and look at our videos or our live streams from when prices were up above $5, what we were saying. So they will know that this was no surprise to us. Like literally, exactly. Like there's times to be a bull and there's times to be a bear, and you just you do it when the circumstances fit, whichever one. And keeping things in mind, like you talk about, like the bullish bias that gets factored into things, like that's something to keep in mind for both scenario. Like, oh, okay, it's time to be bullish, like, and so things are going to move a lot more quickly uh, than if I'm like, oh, okay, things are setting up for a bearish trade, that things can take longer to develop uh, for that, like, for that movement to happen. So there's all kinds of other possibilities because the more time you got to be into something, then the more the fundamentals have a chance to change. And so looking for, the quote unquote like right setup, everyone has the right setup that they're looking for. Their criteria for that is different, but the right setup for a bearish trade may be more extreme, for lack of a better term, than a bullish
You said the setup
trade.
for a bearish trade?
Yeah, yeah.
Yeah, it's it. Yeah, just like you're talking about, if you want, if it's gonna happen fast, I've noticed the same exact thing. I agree 100% with you. Like, if you're going on a short position, you need to be patient. Like, and yeah, you have a lot less margin for error if you're setting up for a bullish position. I mean, you can put a blindfold on and just mash a keyboard and walk away, and you're good. I'm sorry, I totally, but the sentiment is there for the bullish case, like for bullish trades, like people just buy it, and I don't know why. But yeah, did I interrupt you?
No, not at all. Like I think,
Okay.
yeah, it's just going in hand in hand. Is like that's what it is. Like when when it's time to be bullish, like for that, like, and that's just what like we were saying, like it goes hand in hand. Like when it's time to be bullish and it's time to uh make a bullish trade, the the window is gonna not be as obvious, I guess. Like way I would put it, it's not so obvious uh to basically people in general or even someone who's newer to trading. Whereas, like, I don't know who, like, again, like we were saying, I mean, we do know who, like, was, be going along, uh, up there at the $5 and higher range come February. We know who they are. And one of those people confirmed yesterday with their, trading record that they published. So we know who those people are who, like, go long at those price points in this time of year. Uh, yeah, but, like, to us, it's obvious. Like to us, it's obvious at those price points this time of year that okay, this is like totally overbought, and the price is not going to be sustained. Like holding an April contract over $5 for 6 weeks.
Yeah, I don't think a yeah, I don't think an April contract has ever been $5 as the front month. Maybe back in like
1995 or
yeah,
something,
exactly,
back
the
when
'90s.
when $10 gas was normal because there was no fracking and
Yeah, and
all
like
that sort of stuff. Yeah.
you'd see a spike and it'd be like $15,
Yeah,
like
which is like
short squeeze or whatever. I don't know.
right. Which, like, the fundamentals back then were totally irrelevant to today's fundamentals for the most part. Like the environment, the trading environment, the uh, of gas was like comparing apples to oranges, basically.
Yeah, yeah, a lot different. Like, the world has moved on.
Yeah, things have changed big time since then. So yeah, like since then, in what I would call the modern trading environment that we're in now, like those kind of things aren't really going on here in the U.S. market because that's what we're talking about is the U.S. market. And could that change? Yeah, absolutely. Like, but we're not talking about 10 years from now. We're talking about over a 3 month window for a trade. I mean,
Yes,
well, less than
yes.
that even. So it's just like, yeah, like either someone doesn't know what they're doing or they're just gambling someone else's money. They're like at a hedge fund and they don't care because it's not their money. So they're gonna go long on $5.40 gas in February. Because if they're right, they'll like I don't know, get a 10-cent move or something. Well,
Yeah,
I guess they're gambling on like an enormous short squeeze. I guess that's what someone doing that is. They're gambling on a short squeeze like $10.
yeah, like we talked about this um yesterday afternoon, like after the stream, but during the stream, that was kind of like what I was thinking. You you're saying how like the closing of the February contract, it made the short squeeze happen, and in my mind, seeing people buying the way that they were, that they are still, like just seeing the buying pattern, like I have no doubt that some people saw the end of February go all the way up over $7 and thought like, oh, we can do it again. Like we can do it on volume, like with liquidity, because the reason it went over $7 was no liquidity, and someone decided to sell where they could, instead of accepting delivery. And
Right.
yeah, there's no doubt in my mind that some people, probably a minority, thought that. So I don't know, just it's just crazy stuff like that. It is crazy though to me.
Oh, I'm with you. I hear you. Oh yeah. Yeah. That's something to, yeah, why fundamentals I think are so important. They just like click better, with us, the way we look at things. And it's just more money and easier to set up trades for swing trading than trying to figure out with like my magic coffee mug what the price is going to do in the next 20 minutes.
Yeah, man, that I totally agree. I'm glad that I'm very happy that I stopped day trading. That was tough. Um, yeah, I'm just looking at the weather again, just like basking in it.
Hmm.
This
Yeah,
weather
it's losing.
report, like, go ahead.
No, no, you go ahead.
Well, I just now I'm looking at, like, I was looking at it while you were talking about how like the head of that second hump, like around the 19th, is just being smashed down. Right, it looks like someone punched the head of the dome and was boom. It's got a little dent in it, so maybe that'll continue. Maybe like there'll be a peak on the 20th. Like it'll gain some HDDs back. I don't I don't know. GF or the ECMWF has held pretty steady, showing like basically the East or the GFS like corrected itself or whatever, came in line, whatever, however you want to say it, like because there were big discrepancies between the ECMWF and the GFS, and like when that happens, one of them usually comes in line with the other. So far this season, the ECMWF has been the one to come in line with the GFS. This time, the ECMWF has pretty much held constant, and then the GFS went in line with the ECMWF, which is the European model. I don't know what it all stands for. It's like European climate. I don't. I have no idea. I think it's actually like a different language, but
Sorcery.
yeah. But all that just to say, like, it's that hump is gone, that second hump, and it's like at the peak of that hump now is at the 30-year average for weather. So to sustain any kind of prices, above, we're still a high priced. So to sustain even like these prices for a while, that I think that hump would have to come back like in full force up to like 28-degree days.
Oh yeah, that hump would have to come back to what the GFS 34 day is showing right now.
Yeah, what is that? 30?
Yeah, it's like, yeah, well, I guess here, let me take a gander.
It is at 28.
Yep, at 28. Yeah, the peak of that for next week, like in weekend, because the peak's on the 18th on the GFS 34 day is showing demand hump at 28 heating degree days. Uh, like you were saying, on the ensemble for the GFS and on the ECMWF, there's no peak. It's literally right on. Uh, it's literally right on the 30-year average. Like on the 18th, on the GFS ensemble, the 18th where that peak is on the GFS 34 day, on the ensemble, that dot for the 18th is right on the green line for the 30-year average, is where it's at, and that's right in line with what the ECMWF ensemble is showing. It shows the 18th. That dot has consistently been there for days. That it's going to be at the average, 30-year average for temperature. So I don't see that peak coming in. We're for how close we are now to that day. I mean, we're looking at just barely over a week out. When we get within like 10 days, things start really solidifying, and at 7 days, they're solid. Uh, as far as the temperatures go, because we're looking at temperature over a huge geographic area, because we're looking at weighted temperatures over a geographic area, very large geographic area. It's continental United States, weighted by population density. And this population density that's using natural gas to heat their homes and businesses. Uh,
Yeah, if you're like, so we're talking about weather, and that directly affects natural gas prices, especially in the wintertime. That's where most of the volatility comes from, is weather reports, because that will determine our inventory levels at the exiting of the season, and like it really affects everything long term, because it takes from April to like November to fill our inventories up, and it only takes like the winter to like, I mean, to possibly, like just the level of inventories is pretty much determined. Well, gosh, anymore it's all I'm trying to say is, like, if you're having trouble following us, go check out the EIA website. They have a lot of information about heating degree days. Look up population weighting, because that's what's important. Because for residential space heating, it depends on, like, if a weather system hits North Dakota, it's a lot less impactful on inventories than if it hits Boston. You can hit like the entire state of North Dakota and have, like, for a week, and have less effect than 2 days in Boston. Boston alone, like, let alone all the other population centers around there, around the East Coast, Northeast. But go check out the EIA website. There's a lot of information on there just around heating degree days, and you'll spin off into a lot of other websites with your questions and stuff. And there's a lot of information out there. It's all free. Just have to put in a little time. But yeah, like that. I agree with you. The hump's gone. As we get closer to that, it'll be solidified. It's already like 10 days out. Hmm.
yeah, I'm with you. Like people who watched yesterday know I closed out my short position yesterday, realized those gains. Uh, because I was expecting a dead cat bounce. I was expecting like, oh yeah, there's gonna be a dead cat bounce off of $4, and I'll find a place to re-enter. I was getting cute with it, is what I was doing, and that did not happen. So we're like farther down now, and given like the developments of the weather forecast, like we were talking, I would not expect there to be a bounce at this point. What I would call a dead cat bounce, where we would see stuff like 420, 425 prices, unless the only way I could like possibly see that being in the like near future is if we go into the weekend about where we're at now, like we basically trade sideways, and then that hump on the 34-day GFS holds, and it like reappears on the ensemble like over the weekend. And we had some like, panic open on Monday. You know what I mean? Like people were panicking. That's the
Oh,
only way I could. That's the only way I could see that.
like
Like,
short positions were panicking,
yeah,
or
and
like
then people
panic
were
buying, like fear of missing out.
panic buying. Yeah, panic buying, panic short covering. Whatever. I mean, because reality is a lot of shorts are closed. Like when I closed out my short position, a lot of people did. Like open interest has fallen off a cliff. We're at 145,000 right
Oh
now.
wow.
Like it is literally off a cliff. Like it was almost 300,000 at the peak for the month. Like the line is like, it's like, evidently I wasn't the only one who was thinking that, looking at a technical chart, that I'm not using that to like justify my premature exit from my short, but that's just what it was. Like the open interest is like cratered. And it's the 10th of the month. Now I understand that it's a 28-day month. The month's a lot shorter than other months. I get that. Uh, yeah, open interest is just plummeting right now, and so a lot of positions got closed out yesterday and the day before, and one thing I can say, because like for some people, like it was not like during the broadcast, is I was getting kind of like, I was like, man, because I've said before many times, I got 19 greedy bones in my body, and I really do. So when I was like, missing out on even more movement, I was like, oh, biscuits. Like I was, getting consternated, and I was tempted to become an emotional trader and get crazy, uh, but I didn't, and because if I compare my trade to a perfect trade, it looks like hot garbage. But if I compare any trade I ever do to perfection, it's always going to look like hot garbage. Like that doesn't mean I can't critique things and like improve for my next trades. But the reality is to like not compare. I think a big part of this plays into psychology of trading is to not compare ourselves to perfection. Like, what's the very laser beam top of a move, and what's the very laser beam bottom of this move? Who knows? Like, nobody knows. And then comparing, like looking back on a chart in hindsight and looking at that and be like, oh man, there's infinite money to be made or lost in the market, and if we do that, I think that creates a lot of uh, like frustration for traders, and then that can result in like impulsive behavior, which in the long term is just a great way to like vaporize your account. Like turn your phaser from stun to vaporize, and then just like all over your account. That's a great way to do that with your account. In case anyone's like wanting to know how to do that, either trade emotion, like super emotional, like impulsively emotionally, or like yellow on options.
Yeah.
Those are the two best ways I know how to destroy your account.
Yeah, that yep. When I was trying to day trade, yeah, I had the same kind of thing. Like for some reason, I had it in my mind that like like idealistically, oh yeah, I should be able to make this much money a day, or like average this much money a day, but I should be able to make money every day. And just because, like you said, like there are money making opportunities every day, all the time. There's infinite money to be made in the market, and so based on that, I was just thinking about myself like idealistically, like oh, if other people can do it, I should be able to do it. I can't. I just can't. And I finally like accepted it and moved on, found something else, a different strategy that works very well. And yeah, I know all the emotions you went through.
Oh yeah. Anyone who's tried to anyone who's spent time trading, I think has experienced them.
Yeah.
So so at this point, yeah, I'm just looking for uh a spot to short if there's like some kind of rebound, which I'd be surprised by, to be honest. But hey, it can happen. Crazy things happen. You know what I mean? I was surprised and overjoyed by 557. you know,
Yeah, no kidding.
so um, crazier things have happened. And then like just looking for spots to go long, looking for setups. Right now, there's so much like emotion driving the market right now because when you like look at a chart and you see just like nothing but red daily candles, just it's just a bloodbath. There can be all kinds of emotion, and so it's at what point does everything point to oversold on a technical basis because a lot of money gets traded on technicals out there, and then when do they then buy? Because they're looking at just technicals, and then kind of a consolidation of the market, and then like, oh, okay, where are we at, and then we moving down because talking like April contract, I think we'll see before April contract closes out. I think we'll see April at 350. Uh, Myself personally, so that'd be sometime during the calendar month of March. So I mean that's like 4 to 6 weeks from now.
Yeah, it's gonna. Yeah, I mean, at this rate, we'll be there like next week. But yeah, I mean, like, I
Yeah.
think it'll just like I think it'll find a bottom. There's always a catalyst for movement, like or they happen all the time. Not always. They happen all the time. Catalysts come up like geopolitical events, supply issues, like freeze offs or something like that, or like maintenance at a pipeline, things of that nature.
Yeah.
Those are catalysts for driving price. Uh, Weather. I think I mentioned. I'm not sure if I mentioned that, but like, yeah, there's all
Mhm.
catalysts come in all the time for price movement. Either way, we were
Oh yeah.
we were way overbought there. The price. I'm looking at a daily chart behind me right now, and I
Hmm.
was just like looking at my support levels. Like, where's the bottom going to be? And or like where are we going to see the first green daily candle? Um, I had three what 3.908 drawn as support on my chart. I'm not sure why I had that there, but I changed it to about 385 because that's what I think. I'm calling
Hmm.
385. Don't quote me on it because it doesn't really matter anyway. It's just for fun. But
No, it's
like
all good.
we
It's hand
piv-
grenades and it's horseshoes and
yeah,
hand grenades.
exactly. Yeah, we
Like,
most recently when we prices were around this area, that was January 21st. Well, that's what I'm looking at is like January 20th, January 21st, and it pivoted there. So like there was a short squeeze, and it started, sold off, and then resumed selling, and it came down. It pivoted off about 380, and came back up. That was a reversal for another short squeeze. That's when we had that. That's when no, that's when that huge weather spike that just went through, the cold spike.
mhm. Yep. And
Showed
then
up
there was
on that.
another one after. Then there was the weather spike, short squeeze, another weather spike. Uh, and that price point, looking back through December, it was a price point that saw a lot of action throughout December when it traded in that range. After coming down, fall after it fell off the cliff after Thanksgiving.
Right. We'll see. This might be the bottom right here. I don't know. 390 ish, like the what I had 3.908. What I had originally drawn as support on my chart. I'm not sure why it was there though.
Time will tell. I mean, the price has come down a lot. Um, Today's also inventory report day.
Oh yeah.
People, the market's about to open in a couple minutes. For people who are looking at a much shorter time frame than we are, market's about to open, and then shortly after that, inventory report will be coming out. So that's a big day, big information coming off of that, and then I'd be looking at uh, the sentiment that will be signaled by an inventory spike later in the afternoon. People look at
Oh, a volume
daily,
spike.
yeah, the volume spike. Sorry, not inventory spike. Yeah, the volume spike that would be coming between 2:30 p.m. East Coast time in the United States. That people can go look back at charts for each day. There's usually a very noticeable and significant volume spike, and many times that can signal sentiment for the next day of trading. I do not trade it, like, because I'm not a day trader again, but for people who are looking at some window being from right now until the end of like this week, like the end of tomorrow, uh, I think those are the big highlights that are coming out between now and then.
Yeah. What I haven't really read anything. What I usually look for is like to get an idea of what traders are expecting the range, like the range of withdrawal, like the inventory report. There's usually like two different news outlets that I would like actually call news outlets that I
Hmm.
look for to like determine that range. Um,
Yeah,
and I haven't read those. I haven't seen those articles come up in the old news feed.
I have not either. So I don't know. Did they all close out their positions and then go on vacation or something?
Yeah, maybe.
'Cause
Just
I don't know, because I haven't seen them either. And like you were saying, like normally between like 2 hours ago and now, like there's a bunch of stuff that's come out,
oh, here we
and
go.
there's nothing. Ooh,
Here's
did you find? Is
yeah.
it fresh off the press? Is it hot? When it's like right off the printer and you like touch the page and it's like, yeah. Is it that
It's
hot?
well, it's in the okay. So it's in the like consortium of journalists. Like uh yeah. But they're quoting Reuters. So that's
Okay.
yeah. So 206 to 232. That's the range that they're quoting.
That sounds about right.
Yeah.
Yeah, like, that's the thing. All these things are like horseshoes and hand grenades. I think that's like a big. That's one thing it took me a while to like, grasp, and I think that's like big for. I think that's a big thing for people to get their mind wrapped around is it's horseshoes and hand grenades with numbers, whether it's like inventory numbers and predictions and like price points for buying in or selling a position. It's horseshoes and hand grenades. They wait for that like 1/10 of a penny move to get there, then there's a really good chance, in my experience, that they're going to be disappointed.
Yeah, like the reason it's a range is because everyone's trying to, like everybody wants to cash out, and so a lot of people have experienced traders have learned not to laser beam it. Don't wait for that 10th of a penny, and so that's why they'll cash out early. Say if support they're looking for it to go to 380 instead of selling at 380, they will sell or like sell out their short position, um, or buy in, I guess, at like say 382, 383,
Hmm.
because it's kind of like the price will start moving once everyone starts buying. The price will start moving, so it might not see that 380.
Right.
Yeah, it's like just like you said, it's a certain range as you get closer to like say support. Like I was talking about yesterday, you can expect more. If it's support, you're looking at more buyers to come in as you get closer, but it might never get there because enough buyers come in and there's not enough selling, and then price starts moving up. Just hanging out here, you can see
Hmm.
it's kind of a curve. Behind me, I've got 1 minute charts, and you can see. I mean, like it's pretty steep drop off here, and then it kind of like is settling out. You can see a curve, right? And so I would expect buying here. Also, thinking about the inventory report coming up, a lot of people like to take advantage of that volatility, or try to make some money off of volatility from the storage report
Oh yeah.
release candles, and there's usually a lot. Not as much as we've seen in prior seasons, where like you'd get like a 10 cent fluctuation, which is a good solid day trade. If you can get 10 cent movement.
Hmm. Oh yeah. I used to try to scalp that back
Yep.
in my day trading days. That was something that I tried to scalp back when I was day trading UGAZ,
Yeah.
3 times leveraged. Oh man, volatility on that for day trading was just like I had to wear like special goggles so I wouldn't have a seizure.
Yeah. The little candle.
Yeah, literally, because I literally have 1 minute candles on, and it was like, yeah, dude, it was just unbelievable. Maybe that was my mistake. I was using 1 minute candles instead of 10-second candles. That's probably what happened. All the people on
Yeah.
10-second candles were beating me out. uh, oh, gee. Oh, biscuits. Okay, this reminded me because I just saw like a quote unquote news source for natural gas information. Okay, so I'm not gonna name names here because people get upset. But there's a quote unquote heavy air quotes news outlet for natural gas information. Another set of heavy air quotes analytics that came out yesterday, and their interpretation of the short term energy outlook that the EIA put out by that they put out. Their interpretation of that for the price, because the price average that the EIA put out for the month of February was higher than the current price point. They interpreted that as being, oh, prices are going to go way higher. And by that, I mean, they're like, oh, yeah, prices are going to go up like 80 cents. It's like what they
Literally.
put
Yeah.
out,
That's
literally. And that's not what the STEO is the acronym for it because the government loves acronyms. That is not what it said from the EIA. So once again, like, do your own research. Go look at the source material. This article was literally like, oh, dude, like, go long. Like, those are people buying right now. You know what I mean? Like,
Oh
people
yeah.
who are buying and not closing out short positions. They're people who like listen to this blog that claims to be like a natural gas expert, like source of information. Like, literally, that's what they're claiming. And this is what this blog post said. And that is not at all what the STEO said. Like, because anyone can like do it on a calculator, like do simple averages, and yeah. So just keep that in mind. Just every day we see it. Every day, do your own research. Look at the source information. Don't go rely on some like you know blog writer who majored in ceramics. They got their bachelor in arts and like pottery, and now they write for a blog. And I'm not saying that to be condescending. I'm just saying that to be literal because some of these blogs, like we look at like their background, they have no background in natural gas, like none whatsoever.
Let alone trading.
Yeah, let alone trading.
And
Yeah, they
yeah,
have no background in trading or natural gas, oil, anything, and they're writing about this stuff. Like literally, and then that's what comes out. Like this is how this person literally interpreted it. Because why? From looking at the background of the author, they literally have like no experience doing this, and so they have basically didn't know what they were reading when they read this government report. Because it's a government report, it's super dry. Like it is not, like looking at this data is not like ooh edgier. You're not reading Stephen King. Like
yeah,
no one's so like, but that's just what it is. Like they didn't understand it, and so they were just like, oh yeah, prices are going through the roof from here. Like, dude.
yeah. That's something that information from the EIA is something to pay attention to because um they tend to not to have any bias. They're just stating data. It's super dry and pretty straightforward. And anyone with like a calculator can kind of like see. So basically, what we're talking about is they were predicting average prices for February to be about 470. And yeah, there you go. and
Literally.
yeah, and then so like if you could just take two numbers on in that so that's including the price spike, the short squeeze to 557. And so that's an outlier. That doesn't mean that like we're gonna sit at 470 for the rest of the month. That just means like including that huge outlier, the average will be 470. And so in order for that to happen, for that to be the average, prices have to come down. Um, yeah. So yeah, that was pretty comical to see that was their interpretation. Um, and yeah, like not it's
Do your own research,
yes,
people. Do
exactly.
your
Do your own
own
research.
research.
And it's funny
Like,
that you brought that up. Like before that, I was gonna say like for those of you who don't know, on inventory days, the usually unless like barring holidays and stuff, the EIA also releases like later on in the day, like way late in the afternoon, they release something called the natural gas weekly update, and I'm looking forward to that, especially this time of year because it's a pretty good indicator of freeze offs occurring and how fast production is recovering from that. And so yeah, I'm looking for that later today too. And these are all like things like we don't include links to any of this stuff because it's just so easy to find. Just go out, type in Google EIA natural gas weekly update. It'll show up, and just like look at the publication date. Make sure you're looking at the one like the most recent one. Um, Same with the
yep,
STEO. Google EIA STEO. I mean that's why we don't
yep.
include links. This stuff's not hard to find.
Yeah, anyone who's like not able to do it, then don't trade
Yeah.
because people like us are just gonna take your money. Just being real about it, like that's not to be like, like literally, if you don't have the time, because it may not be out of laziness, you just may not have the time. Maybe you work like two jobs and stuff like that, and you don't have time to. But like this is stuff that people got to be honest with themselves about. Do they have the time to do the research themselves? Do it, and if they do have the time to do the research themselves and they don't, well then it's laziness. And like if they're gonna like try to go with that route, then like people like us
Yeah, when you say
are
people like us, you're just saying people who do the research.
yeah, people who do their own research, like yeah, those of us who do our own research, like know what we're gonna go into, like we're the ones who then like are on the right side of the trades. Because yeah, all the people who bought up at like 550, I guess I mean maybe some people like watching their stop losses like trigger like back to back to back to back to back. But I mean,
Watching
at
some
least
day
that's
traders on YouTube, like I think that is the case sometimes.
yeah. It's like yeah, yeah, like, and I've seen spreadsheets where like people they disclose their trades and it's like stop loss, like just trigger 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 like all in the same day, day after day after day, and it's like, dude, what? Because that's what they're doing. They're just like they're going long on this entire backward slide that we've been experiencing right now, and because they're looking at some technical thing that says the price is oversold, and they're reading a blog post that says, "Oh, the price is supposed to be like 50 cents to a dollar higher than it is now," and all their stop losses are getting triggered because they're not doing their own research and like looking at stuff. Uh, so yeah, just
What's interesting,
research.
what's interesting to me is like look at you've said it a couple times like overbought or oversold like technical indicators, and it even with all this downward pressure like all these red daily candles. I'm looking at a daily chart now. It has not even been close to being oversold like based on that technical indicator at least,
Mhm.
and it was overbought when it got to 557. Just interesting. I don't know the parameters like exactly of. I'm looking at RSI, relative
Mhm.
strength index. I'm not sure exactly what the parameters are. I mean, because you can, in case people don't know, like usually in trading software, you can set like the actual parameters of it. You can go to settings, and I'm not gonna do it because I don't. I'm good, but so when I say parameters, I mean like,
You have the default on, but people can
yeah,
tweak it to their own personal
exactly. Thank you.
preferences.
Yep.
Yeah, because like we were saying, we're playing horseshoes and hand grenades here. So someone will put in, "Ooh, okay, I want this to like trigger early, quote unquote early, so that they can get in and out before the herd does."
Yeah.
So instead of hitting that like 380, like we were talking about, they're like shooting for 382, 384, depending on what their personal preference is, just using those as examples,
Yeah.
and they could switch it all up. Yeah. So yeah, I hear you.
Well, yeah, I still hold by it, waiting on the. We got about 45 minutes until inventory report. We won't be
Hmm.
here, but
Nope.
look out for that. And I'm still expecting, unless it's like some incredibly bullish inventory report where it's like very, I don't know, like, I don't even know, like between like 20 billion cubic feet withdrawn over the top estimate. So I'm talking like 250 plus withdrawn. Like I don't, I think price will still come down. 380 is what I'm looking at for it today. But again, this is why I don't day trade because I don't know. Don't quote me on it. But yeah, I feel good. You feel good?
Oh, I feel awesome. I hope you all have a great day, and hope everyone is making money out there.